Happy Monday. In case you haven't noticed, we're doing this at a new time. Our rate talk is at a new time. Good times. The topic of today is, let's get this out of the way so you can see it. I'm hearing a tug of war happening. I'm hearing all sorts of different things. I'm hearing they might even lower the rates, which that would be crazy. I don't know. I don't know what's going to happen, and I'm not panicking. I'm chilling. There's something else that I want to talk about, and I want you to stay till the very end. It's about financing. And last week we talked about banks going insolvent and going bankrupt. The big ones, but the big ones are doing something that we need to talk about, just so you have an idea of what's going on. Let's see what else. Let's get into our headlines real quick. I need to get over here. There, headlines, rates, Bay Area market news. We already talked about scams. I'm not going to do that again. I think that's going to go somewhere else, I think. We already talked about that. Powell says Feds could hike the rates by 0.75. Lacker says more, at least 6. Money laundering we talked about last week. All sorts of stuff. All right. Lacker, former president of the Fed, he didn't testify. He actually showed up on Bloomberg the other day. And I think this is back in June now. Hang on. Let me get my mouse over here. No, not that. This guy right here. Yeah, June 15th. He said, probably what we need to do is just rip the Band-Aid off. And he's a professional, right? You want to talk to people that know what the hell they're talking about. I'm just aggregating information, trying to create this big picture so you guys can make the decision as to whether or not this is a good time to buy or sell a house. If you're an investor, this is a great time. If you're a seller and you need every penny from what you said, what the values were 3 months ago, there's a lot of different options. We're going to be talking about options as well. Airbnb. I know I talked about it last week. That just keeps chopping my hide. I don't know why. That's one of the things. It's like the spidey senses on the back of my head. I just think that Airbnb is being really rough and tough with their hosts, the people that actually own the assets. Now, Airbnb is like Lyft, and they do not own the asset. They just own the channel for people to meet, right? They're being very tough on the owners of the assets, the homes, saying any little discrepancy, we're going to forgive and it's almost like a scam. We're going to forgive the rate, the cost, and give it all back to the guest for any reason whatsoever. So they're definitely not an advocate for the host. Even if you're a super host, whatever that means, they're there to make money and keep the guest cadre happy. They don't really care if you own the house or not. They don't care if you're a host. I don't think they treat them that well. And it's starting to show. I follow a lot of different channels on them, and there's a lot of complaining of what's going on, and they get screwed over quite a bit. So hopefully they change. I mean, honestly, that's one thing that I think is going to really hurt a lot of people in the coming years is while we see the recession happen, if it happens, it's going to hurt a lot of people who made an investment on margin. They're not going to get the type of money or the ROI that they're expecting. That might increase the value or the supply chain. The supply of housing. Again, this is all supposition. There's no basis. This is just my gut feeling, right? After doing this for almost 20 years, kind of have a gut idea of this. Rates, I think rates are going to go up. I know that there's a lot of people saying it might go down, they might reduce it, but that's just going to increase the inflation, and that's really our problem right now. It's not necessarily um, us trying to buy houses and the few people that are stuck between a rock and a hard spot. It sucks. I understand. I'm dealing with it right now with a couple sellers, but I did. Last week we talked about my buyers that are buying down in San Juan Capistrano, and we put an offer on a house that was originally listed. I want to say $899, let's say $850, whatever. It doesn't really matter. Originally, about a month and a half ago, we wrote an offer for $725, and they came back and we bracketed back and forth, and we got to $765, and all of a sudden they said, "Oh, and by the way, we want you to pay for a month of rent back," which was the norm 3 months ago. It was expected. It was all part of it, but they kind of slipped it in, expecting us to say yes. And my buyers said, "Pound sand." They said, "Nope, we're not going to do it." That was a month and a half ago. And wouldn't you know it, last week they came back to us saying, "Hey, are you still interested? We just lowered the price down to $765 or whatever the number was." And I'm like, no. Had a long conversation with them. I said, no. The market's contracted since then. The market's contracted a lot. I have a house listed in Sunnyvale. We finally got that one into contract. I'll talk more about that once the deal solidifies and everything is getting closer to closing. But that was a bloodbath. There are a few great deals to happen right now. And I mentioned that over the last couple of weeks, there are really good deals to happen. We went in, we haven't finished this, and there's no bragging because I don't even know if this is going to happen or not. They might just tell us to go pound sand. We came in at $650. We went in $100,000 less, $115,000 less than what we settled at. It's because there's no buyers. The buyers have dried up. Everybody's sitting on the fence trying to figure it out. And guys, I'm telling you, I know it's like this is a scary time, but this is where you can go and write your offers. And you know what? Who cares if they don't accept it? Write the offer. You're going to insult the seller. Well, you know what? What they were expecting was insulting for a long time. And I know I made a lot of money on that. But again, the number one reason why homes don't sell, it's not because of the buyer, it's not because of the agents not doing their job. It's hubris. It's in their mindset. The seller thinks the house is worth X and it's maybe X minus 15% or whatever it is, right? We don't know because the seller doesn't really choose on what the price is. It's the buyer. The buyer decides what the final price is. The reason why you have agents is to keep the logic in and the emotion out, and we go in and do a job. Our job is to negotiate and get the best terms and rates for our client. And that's how that works. So, okay, back to this. Oh yeah, we're going to go into some other things too. Oops. Video of the week, 5 cities near San Jose. If you're thinking about moving to San Jose, not saying that San Jose is not a good option, but there's other cities within Silicon Valley that you can consider. And that's what this video is about. If you want to learn about it, the link will be in the comments below. All right. Where are homes falling the most? Home prices falling the most. This is by price. The next slide is by percentage, I believe. So over here, they're getting hit pretty hard. Down here in LA, it's getting hit pretty hard. Oklahoma, looks like southern part of Tennessee, it's getting hit pretty hard. I have a stepbrother that lives there. My parents live there, and I have a stepbrother that lives there. So nothing too bad. These are just on numbers, right? Based on numbers, right? Definitely New York seeing a hit. Richmond, Virginia, etc. Metros with the highest percentage of home price cuts. Sacramento, and Reno. And looks like Redding. Where is number 10? Medford, Oregon. Ah, very cool. There's a good place to go, I guess. Boise, Idaho. Who would have thunk? Boise is like the next California. I thought that place wouldn't be very well insulated, but I guess they saw a huge increase. I know a lot of agents out there, and they were doing really well and making a lot of money, but also seeing those values go up. I've done some interviews with them in the past. Indiana, but Indiana, go figure. And Anchorage, Alaska, but that doesn't make sense. But these are just percentage, guys. And this number changes every day, every month. You see the numbers that I show on Wednesday. You're going to see that these numbers are going to perpetuate and change up a lot. This is new homes. This is home builders. This is something that I've been chewing on for a while, and I think I talked about it last week. But this is how many new communities they're building in different areas. Now, it's not very telling because you don't know exactly what those numbers mean. Like maybe in San Jose, it's -42. Wow, that's alarming. That's a really big number. That's crazy. But maybe they're just running out of room. I know San Jose is running out of room. And over the last couple of years, they've done a huge amount of starts. If you look at, we just went to Winchester Mystery House yesterday, and it used to be 140 acres or something crazy like that, which is really like a half mile by half mile, right? It's down to just the building now. The entire acreage where they used to grow apricots and almonds and all this stuff, that's all gone. There's condos everywhere. So if you looked at Winchester Mystery House, like right here, and Winchester is the street right here, everything around it is all brand new building, condos, hundreds and hundreds and hundreds of condos. So those are starts, right? I think that's what this is really talking about. They did a huge push over the last 5 years, and everything kind of just coagulated, and now they're stopping. Mostly because builders, why would a builder start right now? Why would a builder start a huge project? I'm going to put 500, we'll say like $5 million into a new project, and I'm not going to get the same ROI I was going to get 2 years ago. I wouldn't do it. It's not a smart thing for you to do right now. Might be for them for the long term is they're going to go out and buy large plots of land for the next boom. That's probably what they're going to be doing. So you're going to see all these numbers kind of grow a little bit. All the red numbers are going to start to grow a little bit. All right. And that's also something to talk about why the values will come back. This is new housing starts over the last 50 years. Or sorry, new housing completions in the last 50 years. We're way below the population growth. I'm starting to do shorts, trying to experiment with shorts to see if people actually like it or enjoy it. So if you go to my TikTok, you'll be seeing stuff like this. I'm just trying to figure out what people are liking. So what happens if you're thinking about being in the market or thinking about buying or thinking about selling or moving to a different area or what have you? If there's a need to move, then stay positive, right? I know it's going to get frustrating because we're used to seeing houses sell within hours, and it's not happening anymore. It's just not. I mean, it is in other areas, in areas where it doesn't matter if they need a mortgage or not. And we'll talk about that in a second. But you have a lot of choices, right? You have to know what that is. Again, I mentioned it earlier, act with logic, not emotion. Figure out what the right course of action is, know what all your options are, and make that decision. Don't look back. Right? You're going to look back and say, oh, I should have done this, done this, done this. Well, you know what? That's part of life, right? You're going to make a mistake. That's okay. That's what buyers are doing right now. They're thinking, oh, I'm just going to wait for the market to get obliterated. Again, we talked about this. Once the market starts crashing, the investors are going to come out like a feeding frenzy, and you're going to be back into the competitive mode. Now is the time to act. If you have to move. If you don't have to move, stay around, just watch your Netflix, go out, start focusing on exercise, get out and get some vitamin D and some fresh air, and connect with your neighbors. But most of all, understand that this is going to be trying times when we've been through it before. It's not going to be like the end of the world. This is something that I'm working on for Wednesday. Who's going to get hurt in the recession? And we'll talk about this in a little bit. Yeah, so that's pretty much it. I know rates are going to go. I'll bet you $5. I'm not a betting man, but I'll bet $5 that rates go up another 0.75 at least. On Wednesday, we're going to talk about the economy, unemployment numbers, supply, see how that number's growing in every city that we're tracking right now. Again, this isn't a time to panic. This is a time to know what your options are and make logical choices. And that's really what I wanted to talk about today. I know, what was this right here? Oh, we talked about this last week. Oh yeah, rates right here. These are rates from July 15th, right? 30-year jumbo, 5 1/3. They've gone down a little bit, right? 30-year, they're pretty stable right now. 16-year or a 10-6 arm jumbo is 5.1. 10-year 5.1. Yeah. See, that's fixed for 6 years, so that's gonna be a little more risky than this. So when we're talking to people about buying houses right now, we're not talking about the standard 30-year fixed, right? Because it's still more expensive. But you look at it, 7, a 5, a 10, those options are still fairly affordable. I don't think we're going to come back to 2.25, 2.5. I'm not even going to say that we're going to see 3 anywhere, anytime. I think what we have to do is just be conscientious that was cheap money. That money was lowered that low, was brought down that low to keep the economy moving forward while we were printing trillions of dollars to keep this economy going. Now we have to pay for it. Now it has to pay for it somehow, right? And that's what we talked about on Wednesday. The economy is going so high, so hard right now that inflation is going up, and it's continuing to go up by increasing the rate or increasing the cost of money, whether it's mortgage or credit card or auto or business loans or what have you. That cost of money has to come back to normal. We have to stop paying people to borrow money. It's just ridiculous. It doesn't help anybody except for the person in the immediacy. So there you go. That's it for now. If you have any questions, comments, you want me to look at other things, talk about different things, or you want to be a guest speaker, come and talk to me as a talker. If you want to be a guest speaker, by all means, jump on, text me, DM me, set something up. I have a couple of guests coming up in the next couple of weeks, and I'm really excited about it. So that's pretty much it. All right, guys. I'm Vito Scarnecchia with the Abatana Group, powered by Compass.